Live from the Las Vegas Traders Expo, I'm Dan Gramza, and with me today is Dennis Gartman. Dennis, I know you had a lot of different presentations here at the Expo. Would you give us some insights in terms of what you talked about while you were here?
Well, I talked about trading philosophy to keep it simple. People have heard me say this before, but the secret to trading is doing more of that which is working and less of that which is not. That's really the secret. It's a secret in life.
Yeah, that's a very good point.
I mean, it really is, and we hear all the time, cut your losses and let your profits run. That's harder to do. I keep it simpler. Try to do less of that which has not been working. Try your damnedest to do more of that which has. That's what I talked about. I also talked about the importance of term structure. Without getting too esoteric, I want to watch how markets move from Contango, where the market is saying to you, to the owner, we don't need you right now, we'll pay you to go into storage, or to backwardation, when the market is saying to crude oil or grains or cotton, we do need you right now, and it will cost you to go into storage. So the shift in the nature from backwardation to Contango, or from Contango to backwardation, I think is the evidence of where informed, sophisticated, large money is leaving its footprints. So I spent a lot of time talking about that today.
So if you see a market now moving into backwardation,
yes,
you would be looking for buying opportunities.
Oh, absolutely.
Because you would expect that momentum to carry them,
yes,
right?
Yes, exactly. And what's interesting is people get it wrong. For example, Dr. Bernanke, about 5 or 6 years ago, when crude oil was making its run from $60 a barrel to $125 a barrel, at about $65 a barrel, he was explaining that inflation is not going to be a problem because deferred crude oil futures were selling at a discount. And I said, no, this is a backwardated market. This is telling you that prices are actually going to be higher in 6 months from now than they were. And if the chairman of the Federal Reserve Bank didn't understand it, I understood this was difficult. So I actually went to go see him. I actually went to see one of the other governors to explain what contango and backwardation is. And what was interesting was, as the market was moving from $65 to $125 a barrel, on up days the front months gained on the back months. On down days the front months still gained upon the back months. So the backwardation continued to widen all the way up. And then at the very end, as we got above $115 a barrel, there was about a week in time when the market was trading $1 higher, and the front months lost to the back months. And I thought, you know what? This is informed money quietly saying, we're out. We're going to the sidelines.
Excellent observation, because you're right. That flow is now exiting, even though price is moving.
Even though prices were going up,
they're selling into that.
They're selling into that. And on the other side, when crude oil fell from $125 a barrel down to $45 a barrel, we went to an enormous contango, went almost like a $5 per barrel 1 year contango, and suddenly we were going down a couple days, and the front months started to gain upon the back months. Oh, this is interesting. This is not how a bear market should function. This is a change. So there was, again, informed, wise money was moving back into the crude oil market. So if you learn anything from me, learn the first rule: do more of that which is working and do less of that which is not, and then learn how to analyze how the term structure is telling you where informed money is moving at the margins, at the periphery. You'll be so far ahead of everybody else. You'll be early, but you'll be learning something.
Well, one thing about that, it is a fairly consistent sign that something's either has changed or about to change.
And it's the same
when you're looking at that money flow.
It's the same whether it's in crude oil. It's the same whether it's in soybean meal. It's the same whether it's in corn. It's the same in wheat. It's really the same in cotton. If you really want to be bullish on something, the easiest thing to do, buy the bull spreads in almost any commodity, and look at them on alternate Tuesdays.
Alternate Tuesdays.
Yeah, i.e., don't look at them during the day. Don't look at them at the end of the day. Look at them every other Tuesday. See how the term structure has moved. Has it moved in your favor? If it has,
I like that. And because it isn't, it is a monolithic type move. It's not a 2-second move.
It is. It's an aircraft carrier turning around in the water rather than a speedboat.
There you go. I like that analogy. You're right. But it is, I think, a very interesting insight into that flow of capital.
It's exactly what it is.
Where's the demand for that with that capital?
It's the best indicator of change of sentiment amongst intelligent, wise, sophisticated money. That's what the term structure tells you. It's a very good indicator of sentiment amongst wise, sophisticated, intelligent traders.
You know, that's interesting you say it that way, because I think of it as that institutional flow.
That's what it is.
Which is where those hands go, so goes the market.
So goes the market, exactly.
Yeah. Well, that's excellent. Thank you, Dennis, for being here. And would you also just share a little bit again about how people can get a hold of your information?
We don't do Twitter. We don't do Facebook. Don't try to find us on there. If you do Google us, you'll end up finding things. People call me names. So if you want to get a hold of us, send an email to Chip, C-H-I-P, Chip at thegartmanletter.com. That's all one word, thegartmanletter.com. Or send it to me, Dennis at thegartmanletter.com. I actually do answer my own emails.
Terrific. Again, Dennis, terrific. Thank you for the insights.
Thank you, Dan.
And thank you for watching. Live from the Las Vegas Traders Expo, I'm Dan Grahamson.